Good morning, everybody. Hey, welcome to Thursday, February 18th. Hey, Charlie, tell everybody hi. There's Charlie, our official greeter here at Statler Financial, and I hope your morning is going well. Well, I hope seeing Charlie made your morning as we get ready to see what's happening on the front of the financial world. And it is a little red this morning. We ended up with a kind of a mixed bag yesterday, and Dave and I will discuss what's happening today with a pile of earnings coming in, some economic news coming in, and obviously jobs, unemployment coming in today. So that'll be our topic of discussion. But before we join Dave, let's remember that there's only one thing that anybody can control within their portfolio, and that's the amount of risk you have. And the question is, do you know what your risk number is? Most of the folks I sit down with don't. Between 1 and 100, what is your risk number and what is the risk number of your current portfolio? If you don't know, you need to give us a call, 863-382-0037, and go through our financial x-ray to at least better understand where you are. Hey, Dave's coming up next. Looking forward to our conversation about what's happening in the markets and the economy.
9 from 105.7 Light FM. So what's going on with your money this morning on Wall Street? We try to make sure that you know how your retirement funds are going before you go to work every morning. That's why we bring in Phillip Statler from Statler Financial Services every day to kind of quantify things and find out how things are going this morning on Wall Street. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well this morning. It's Thursday. The week's almost over. We got I'm going to say a lot of economic news coming out today, as well as a lot of reports coming out of household names that people are going to recognize today. So, and yesterday, you can tell them we kind of ended up on a mixed bag yesterday, didn't we?
Yeah, we did, actually. The Dow kind of recovered. It was lagging for a little while yesterday, but it ended up 90 points yesterday. So we start the day out at 31,813. S&P was off by 1 point, nothing much, and the NASDAQ fell a little bit. Call that profit-taking more than anything, down 82 points yesterday. But on balance, when the Dow goes up by 90 and gets another intraday high, I'm going to call that a win-win for the day overall, wouldn't you?
Yeah, I think so. I mean, it's the indexes that were down were not down by much, relatively speaking. So, yeah, I thought it wasn't a bad day. The problem is that we're not going to follow through today.
It sure doesn't look like it. It was for a quiet start to the week. We're getting flooded today, so let's get right to it. The usual Thursday number that comes out, the unemployment picture. I'll start out with the good news. Continuing jobless claims actually fell to under 4.5 million continuing jobless claims. Then you get to the first-time claims for the week, and it was up in a big miss, 861,000 people out of work for the first time in filing claims, and the government turned around and revised another week from 2 weeks ago upwards. So in terms of current events on the unemployment front, it wasn't what we were looking for by a wide margin, was it?
No, it really wasn't. I mean, we're looking at the current. I mean, we expected 760 to 773,000 first-time claims. We came in at 861. I'm going to say that's a pretty good size miss. And when the futures started seeing that, it started trading down even further than what it was before that.
And it's not good news. Yeah, the revision from 2 weeks ago, when we actually had a pleasant surprise, was even less unpleasant. We missed by like 100,000, depending upon how you were looking at. Then we get into housing, construction being incredibly important. Housing starts, another major disappointment, fell in January by 6 full percentage points, and that's one of those numbers that almost hits the unbelievable level like retail sales did yesterday.
Yeah, it does. I mean, it was off by about 100,000 starts. So that's not a good sign. But, you know, you got to think, Dave, with the blistering winter that we've seen hit through the Midwest and the Northeast, maybe, just maybe that number starts to make a little sense because you can't start construction when you got ice on the ground.
Yeah, and that's the point. And there were some rather cartoonishly bad winter storms that went through the northern tier of states. That might be, and in January, you and I've said this before. In January, you tend to take all these numbers with a grain of salt. Tends toward being backed up by the fact that we had a pleasant surprise as far as building permits being pulled. They were up by 10% last month. So while it was a crappy month last month for actually building things, we're planning to build a lot more than we expected.
Yeah, we do. I mean, that was a huge, I mean, I think it's like 200,000 more permits than what was expected. So that was a real pleasant surprise. Now that just because they pull the permit doesn't mean they're going to start construction really anytime soon, but it does mean that it's on the drawing board, that they are looking to break ground and start building. So that may be some good news that should follow through to the construction starts.
Absolutely, and we'll take any bit of leading economic good news we can get. The other tidbit that comes out, the Philadelphia Federal Reserve put their business index out, and their February index was down from, again, these numbers, the absolute numbers don't mean anything because that index goes different measurements across different feds, but it went from 26.5 down to 23.1 for February. Some of that probably, like you say, is the crummy weather they've had in the Northeast this winter. It's, while we've been relatively decent down here, the northeastern tier of states, it seems every day we're getting another headline of another storm or something crummy happening up there.
Yeah, that's for sure. They are just getting pummeled. I mean, poor Texas. They're getting killed. The Midwest. I mean, I think I was talking to somebody up in Topeka the other day. They were down like wind chill factor of like a minus 20 something.
Oh yeah, I've got Ken in Dallas. One of them was out of power for a week, for over a day the other day. It's been atrocious in Dallas lately, and that's mild compared to what they've had up north.
Yeah, and my daughter in western part of Tennessee, they've been down to the minus 4. I mean, not minus 14, but like minus 3 wind chill. It's just crazy weather.
It really has been. The other item economically, before we get to the individual reports, is import prices. We're kind of waiting on export prices. I haven't seen that yet, but import prices were up by 1.4% in January, and my instinct is we're rapidly hitting that point where we'd kind of like to see a little inflation on domestic prices, but import prices, kind of like to see those slack off a little bit as we recover.
Yeah, we would. We had an expectation somewhere between 0.9 and 1%. So that's a little bit more than what I'd like to see right now, given our economic circumstances. And I was reading an article that indicates that inflation is starting to really get up there. Copper prices hit an 8-year high yesterday, and oil, I believe, is at a 12-month high. So all those things add to inflation.
Oh, yeah. When we get to the futures, we're not going to like the price of crude oil this morning. I know that. Can you give me any good news on the individual companies that are reporting this morning, Phillip?
Well, let's end with good news. Start out with some bad news, at least on stock price. We had Walmart report, and Walmart, you and I were talking about the other day how they're kind of a bellwether for retail and employment. Well, they didn't have a real good quarter. They missed by about 11 cents a share. So not good signs there. Now their revenue did beat, but in their U.S. same store sales were substantially better than expected. But man, the traders are not liking Walmart this morning. They're down 5.3%.
I was going to say, when Walmart shows up at the top of my big loser list for a day, I know we had a bad report out.
Yeah, exactly. So, hey, yesterday I think we had Hilton. Today we got Marriott. They kind of were bucking the trend. They actually beat the street. They came in and had made 12 cents a share. That's a penny better than expected. Obviously, the revenue still missed the forecast. And they're having some structural changes because their CEO passed away, and so they've got some things happening there. But they're not getting beat up too bad. They're down about 0.5% this morning. Given what the futures are doing, they're probably just trending with the futures.
Mm-hmm.
The Hormel Foods, they They on your big winner list, huh? They did better than expected, and on both earnings and on revenue, and they're optimistic that they're going to raise their full year guidance for both revenue and earnings. They're up not much. They're up about 0.1% right now. So let's look at my big winner
They
today.
were a little high. They were a little higher than that on my delayed quote, so they were up well into the middle of my big winner list. I was thinking they're going to have to mix up a new batch of spam if the demand stays high.
Yeah, I know they were originally up like 2.2%, but they've given some of that up. So, so let's talk about marijuana here for a little while. What about Tilray? Tilray, they're one of those first guys out there when it comes to that stuff. They came out and did better than expected. They only lost 2 cents a share versus the 15 cents they were expected to lose. And so revenue was above forecast as well. They're going to merge with a company called Alpha. And so that should happen in the second quarter. But Tilray is up 4.3% this morning.
Cool. I never thought that you and I would be talking weed on the financial report in the morning.
I know. It's crazy. So I've got 2 or 3 big losers here. So let's talk about SunPower. SunPower is a solar company. They produce solar equipment. They had a great quarter. They came in double what was expected on earnings. Revenue, though, fell short, and they lowered their expectations for the current quarter. So they're getting killed today. They're down 9.2% after being down 6.3 yesterday.
Okay. Let's see if we can cut to one more of the headliners before we get to the futures.
All right. So we've got Sleep Number Bed. They hit it out of the park. They had better than expected earnings, better than expected revenue, and they are up substantially this morning, up 13%.
Wow.
A new 52-week high.
They've been doing some aggressive marketing lately. Evidently, it's working for them.
Yeah.
Resetting the table, Dow up the other two pretty much sideways more than anything else yesterday. 45 minutes before we opened, we kind of alluded to it. Some of it's profit taking. Some of it is just, oh, crud, we don't like the employment numbers. Where are we going 45 minutes early?
Well, we are down across the board today, Dave. We got the Dow down a little over 0.5%. The S&P 500 is down 26 points. That's about a little over 0.6%. We've got the NASDAQ down 1%, and the Russell 2000 down 0.75%. So all stock indexes heading south. The commodities a mixed bag. We got silver down about 0.2. Gold is up 0.5%. And then that illustrious crude oil number up almost 0.7%. And you're not going to like this, Dave. $61.56 a barrel right now.
You're right. Don't like that one tiny little bit. Overseas markets are mixed bag this morning on the Asian rim. Hong Kong markets were up measurably. The Japanese and mainland Chinese markets were kind of piddling either side of the zero mark. Europe's doing about the same, a mixed bag, just a little either side of the zero mark. No great trends so far today. Phillip, this is one of those days where everything was looking pretty decent yesterday, and then today, well, the bottom's not falling out, but a day trader's definitely not having a good day. That takes stability. You're talking retirement. How do I find you to get that?
You're right, Dave. It does take stability, and that's what people need, especially if they are 5 to 10 years out from retirement or they already are retired. So give us a call at 863-382-0037. Catch us on our website, statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And we get you back here tomorrow morning for one last shot at the week and see if we can't make it a green day tomorrow. I'll see you then, Phillip.
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today. Remember, stability and certainty is what we want in our retirement accounts. give us a call at 863-382-0037 to schedule your financial x-ray. Hey, I hope you have a great day. I look forward to seeing you guys again tomorrow. Take care now.